There's two different tax rates that you really need to understand and wrap your head around. One of them is the marginal tax rate, one of them is the effective tax rate, okay? Marginal tax rate is the most simple to understand. Go to Google, type in 2020 tax tables or 2019 tax tables, okay? Or just type in tax tables and see what comes up. Those are marginal tax rates, okay? So, for instance, we'll pick a common one between $39 some odd thousand and $84,200. The tax rate is 22%, okay? That's for 2019, this current tax season last year. So does that mean that someone who earns between that 39 grand and that 84 grand will pay 22% on that money? No. That 22% is the marginal tax rate. So what does that mean? English, right? It means that for every dollar in between that 39,000 and that 84,000, every additional dollar that somebody earns or makes will be taxed at that 22%. It's the marginal tax rate, the tax that you pay on the additional dollar that you earn. Okay? So when you're looking at those tax tables, those rates that you're seeing on there are the marginal tax rates. Now, the other tax rate is the effective tax rate. So how is that different from the marginal tax rate? Well, when you're looking at the tax tables, what you need to do is you see how it has different levels of income, and it goes 10, 12, 22, 24%. Okay? So we'll stick with that person who makes about $40,000 a year. So if you're looking at that tax table and it says 0 to 9,700, that means that their first $9,700 is only taxed at 10%. Okay? And then when you make above 9,700 up to 39,475, between that 9,700 and 39 some odd $1,000, that amount is then taxed at 12%. And then when you get above that 39 some odd $1,000 up to that 84, the amount made within that range is taxed at 22%. So it's not taking your entire 40 grand, say if you made that, and taxing it at 22%. The first 9,700 is taxed at 10%. The next amount between 9,700 and 39 some odd $1,000 is taxed at 12%. Anything above that 39 some odd $1,000 is then taxed at 22%. Because it's not fully, the whole thing that you made is not taxed at 22%, your effective tax rate will be lower than your marginal tax rate. So that is basically your marginal tax rate and your effective tax rate. So the way that you determine those rates based off of those two things is off of your taxable income. Okay, that's not your total income. Now, there's another tax rate that you should actually be aware of, and it's called your average tax rate. Okay, this tax rate is based off of your total income. I will go into detail kind of about each one of these as to how they're calculated and how the same person making $50,000 has 3 different tax rates. You have 3 different tax rates. Everybody has 3 different tax rates. Okay? So average tax rate is the one that actually counts your total income. When you're looking at your marginal tax rates and your effective tax rates, that takes your total income minus some deductions, okay? And then you get to your taxable income. And then it will take your total tax due, divide it by your taxable income, right? And these deductions, they're deductions that pretty much everybody gets, okay? So it's not anything fancy that, only rich people get. It's pretty much things like the standard deduction or itemized deductions. It's things like that pretty much everybody gets, okay? There's nothing special about the deductions. Pretty much everybody gets them. So the average tax rate is the only tax rate that'll take your total tax due and divide it by your total income. The effective and the marginal tax rate take your total tax due and divide it by your taxable income. So what does that mean? Your marginal tax rate will always be the highest, then in second your effective tax rate, and then in last place will be your average tax rate. If you look at your average tax rate, it will be your lowest of the three tax rates. This is something you need to be careful of when you're looking up what does such and such person pay in taxes. When you're looking at your tax rate yourself, this is something you need to be aware of because you really need to understand, okay, what's my marginal tax rate? How much more am I going to pay on in tax if I earn $1 extra? Your effective tax rate is your total tax that you paid divided by your taxable income, which will be less than your marginal tax rate because of the different tax brackets. And then your average tax rate will be the lowest of the three because it considers your total tax due divided by your total income. The difference between your total income and your taxable income is your taxable income is calculated by a bunch of deductions. Okay? Sometimes not a bunch, sometimes only one. But those are the three different tax rates in a nutshell, and I'll have some more videos throughout tax season explaining in detail, more along the lines of the average tax rate and effective tax rate, because marginal tax rate's pretty easy to understand, I think. But yeah, I mean, I hope that helps. You should just really understand when you're researching things, when you get your tax return back, if you want to know what your tax rate is, you need to understand that there are three different tax rates each individual taxpayer has: marginal tax rate, effective tax rate, and average tax rate.